Good evening, everybody. Happy Sunday. How's everyone doing? Quick sound, mic, video check for everyone. I'll get the thumbs up for everybody before I really get in here. I hope everyone has had a wonderful, wonderful Sunday and weekend. It seems like it went by super fast. Maybe just me. Maybe because I did the 1 o'clock Central Hour on Friday on TopstepTV. It just seems like I'm right back here, and we are right back for another week in these markets. Yeah, I don't really understand why this weekend went by so fast. We had the Red River Rivalry down here in DFW, so we had the Texas OU game. If you're not a DFW resident, it just tends to be a wild weekend where there's just a lot of people, a lot of activity. You've got the State Fair of Texas going on, so just a little bit of chaos here in my neck of the woods, but did provide a relaxing weekend for me. Got some stuff done. You know, we had a pretty good week in the market personally last week, so I don't know how everyone else did. I don't know how everyone else has been enjoying their NFL Sunday as well. We had a London game, so that was a good way to kind of kick off my early Sunday morning, but I really haven't been watching a lot of football today. Kind of just been doing some things around the house and, you know, getting organized for the week. The whole point of this show is to get you guys organized for your trading week. In fact, I know you guys can't see anything behind me on my Sunday show, but this will be the last, most likely. I mean, grain of salt, knock on wood. We'll see. Hopefully everything goes well for me this week. And, you know, I have the time and patience to dedicate to moving my entire office and streaming setup and trading setup and everything else that goes on in this, you know, little realm that you guys can't exactly see today, but you will be seeing tomorrow. I'm going to be moving my office upstairs. So this will be the last market kickoff in the current state of things. And then you guys are going to have to bear with me for maybe a week as we kind of get out the kinks as I'm reestablishing my streaming setup and making sure everything is looking, sounding, and is comfortable for me to actively trade into. So it might be a little work in progress, but this will be the last market kickoff in the current state of my my office. So we'll kind of work through those challenges, I think, together. So that should be pretty terrible if you've never moved offices. It's a lot like, you know, I mean, I have a lot of monitors. I have a lot of screens. I have the 2 computers set up. I have a Mac and a PC and a bunch of wires and cameras and microphones and all the other fun stuff that it takes to, you know, run a production with TopstepTV, as well as obviously my own show on Sundays. So we get to rebuild all of that fun stuff starting this week. So hopefully nothing too crazy, but we'll get that done and we'll get, you know, right into the markets as we usually do. But, you know, how was everyone's week last week? We have the ES charts up here. And, you know, no surprise, it was exactly what we would have expected if we were looking for, you know, air horns and, you know, new all-time highs. There was no bad news. We had some Fed speakers, but it just was kind of a slow death by 1,000 cuts move to the upside with a couple small breakouts and then, you know, some passive, whatever you want to call it, profit taking, maybe some little sells here and there. You know, CPI was almost a non-event when we talk about the volatility that came before it, during it, and after it, as well as PPI and really everything else that was going on with the Fed, what the Fed was saying all week. And we had a gaggle of speakers all last week, and we really didn't move a whole lot. Yes, we made new all-time highs. In fact, we made 2 of them. I think we did on Wednesday, and then we did again on Friday, yesterday. Whatever day it was, Friday. But it didn't seem like we moved a whole lot in terms of, you know, the grand scheme of where we were trading in the old balance zone, you know, kind of the high end of that being in the 5,800s, 5,810s. I mean, we're really only about 40, 50 points higher than that, where we're probably going to open for, you know, the Sunday open. So we really haven't moved. In fact, NQ is just kind of to the back to the top end of that old range that we were in like a week ago or 2 weeks ago. So, you know, given how bullish the market's looked and given this zombie rally to new all-time highs, I'm still not exactly, I guess, sold on it just yet. I mean, I'm not going to be the one fading this, but it doesn't give me a lot of conviction that there's not going to be a large sell at some point to, I guess, when we're trading at all-time highs and the VIX is still sitting above 20, and in fact hitting 21 as we're continuing to make new all-time highs, and you're seeing volatility continue to kind of be bid, it's almost horrifying that you may get a very violent sell at some point. It's just asking for it, I guess. But we'll see. Until then, guys, I mean, just the overall perspective of going into this week is you need to find a spot to potentially join the rebidders if we get any sort of weakness in the early part of this week. If it's not a catalyst, if it's not a news-driven sell-off, if there isn't something negative coming out, and there are a lot of, we're in the very front end of the new earnings season cycle for, I guess, Q3. Now us being in Q4, but the Q3 earnings, you've got a lot of the banks this week. And you kind of have that full kickoff of all of the organizations that are going to be reporting going forward. So a number of them could provide some aspect of a direction if, one or two happen to give us a good reading on what's going on in the U.S. economy, and there's all these other things that could potentially finally push us down an elevator shaft or just give us a reason to sell. But until there is a reason to sell, you should not be trying to, short this outside of intraday scalps. So with that in mind, looking at ES and looking at last week's profile, we obviously did leave barely, but we left the top end of that balance range. I think the 810s were kind of providing a lot of resistance in the last couple of weeks. The top end of, these last few weeks of volume profiles had provided a decent selling opportunity. In fact, I think I was saying even, there's nothing wrong with kind of taking the stop out of trying to short the top end of the range, just because we had been rejecting off it for 2 or 3 weeks. And, I know the whole premise of like, hey, the more we knock on some of these levels, the less strength or the less resistance they provide. And that was probably true at this point. We kept kind of, trying to knock those highs. And eventually we broke through 810s and went and made a new all-time high on Wednesday. I think I was on with Rips, and it was almost like a zombie rally until we finally burst through to make a new all-time high. And then we basically balanced until we had a new version of that exact same play on I guess it was Thursday, maybe it was Friday, whatever day it was. But when we burst through 5,800 SPX and kind of the gamma wall that was there for most of the week, it seemed like that had gotten rolled up during the early parts of the session. And naturally, we pierced through 5,800 pretty easily. In fact, it provided almost no resistance outside of if you went short right around that level, you may have had a minute or two to get a couple points, and then you would have had to get out before it blasted another 10, right to where I think the option wall basically had moved 10 points higher, fit roughly around, 5860s, which is basically where we kind of capped out for the week and where the new all-time high kind of stalled. But we're kind of in this weird spot where, yes, we could continue to kind of do what you would expect, where maybe we get a passive sell back to the old all-time high where we've been chopping around in the 5830s for the last, couple sessions, and it's provided a lot of decent rebid opportunities. So the first play for this week, or even for tonight, is do we find passive buyers kind of returning in that general area to, go make a run at all-time highs? So there's a long opportunity there. If not, I'm actually looking a little lower for my pivot. In fact, I'm probably not looking to short this unless we kind of get back below 5,800s and I see sellers on the tape. Otherwise, I'm probably looking to rebid 58s, 5810s for that trip back to, new all-time highs and aspects like that. There's really not a ton of bearish momentum here until we get back below last week's pivot. If you guys remember, it was kind of that 5760s spot, pretty much the point of control of last week's range, or 2 weeks ago's range, where I was saying, until we kind of clear that and make a move lower, there really, there may be a shot at us going to make a run at 5,700. And we had that kind of sell down on Monday, but naturally where we found buyers was exactly what we were talking about. Where were the lows of last week's range? We found buyers step in right there, and we were bullish ever since. This is why we talk about volume profile and why it's important to kind of use this in your market prep, or at least have an idea of where the volume was trading and the ranges from the previous weeks versus just jumping into trades here and there, without a plan. Because if you had the logic of, well, Nick said pivot, around 5760s, but he also said, hey, we could definitely go down and go to 5700. But the logical place is if you just kind of looked at last week's profile and said, hey, where's the low, and do I find sellers below that low, or do you find passive buyers rebidding in that area? I mean, there's the easiest long you're ever going to have. If you just looked at something as simple as I'm going to take a long at the previous week's low if we get a rebid opportunity there. That's how simple trading can be sometimes, guys. It doesn't have to be this complicated plan. It could just be as simple as playing the previous week's range, either for a breakdown in that area at 57.24 or a rebid, and you would have made a lot of money in theory. So the same premise applies here. You know, you're looking at last week's range and even the previous balance range that we've been in, that 5,800 to, you know, let's call it now a little wider just because we went down to retest it. Let's say, you know, 5740s to 5,800s, roughly a 60-point range. You know, you're still looking to potentially play that if we can find sellers pushing us inside 5,800 again. The most logical place would be a short there down to, you know, 57.75s, as well as all the way down to the full traverse of value being, you know, to the low ends of last week in the 57.40s. So pretty simple plan. We're at all-time highs. If we fall back into previous balance, the logical place is the range rules applies trade, or you're looking to fade the top, maybe for a trip back to the point of control from, you know, the multi-week balance area that we've kind of been in, and, you know, looking to kind of take profit below maybe my pivot for the week, which, like I said, is going to be somewhere between, you know, 5780s to 5800s. I'm going to look back and, you know, look further back to previous all-time high and other things too, and kind of just dissect some of this volume and some of the price action that occurred this week and going back previous weeks. But for the time being, I think below 5,800, if we find sellers there, it may, you know, give us a trip back to 5760s for a trade. It also could provide a great rebid opportunity to go make a new all-time high. So that's how I'm reading ES, at least for the early parts of this week. As we keep always discussing, guys, price action is going to rule everything. I'm not saying I'm looking to short below 5,800 and long above it. I'm more so saying with pivots, when I talk about them, as always with volume profile, what does price do when we get there? What does price action tell us? What is the tape actually saying when we interact with some of these levels? That's why even my pivot for this week is going to be at least 10 points wide, just because I don't really know what's going to happen when we get to, you know, that area. I think it definitely could provide a passive rebid, but I also could see sellers stepping on the gas if we were to get any sort of reason to sell this week. I don't think this level is going to hold very much, and we're going to go right back towards, you know, the lower ends of the 5,700s. But if not, I'm jumping on the train to, you know, hopefully go get an air horn. Oops, didn't hit the right button. To go get an air horn in the early part of this week, much like we seem to be doing in just about every asset class, at least, you know, ES, the Dow, gold, and, you know, hopefully the NASDAQ in the near term. I don't think so, but we'll see. Speaking of the NASDAQ, the NASDAQ had a slightly different type of distribution. We closed near the highs, and in fact, I would call that a pretty good P-shaped volume profile from a weekly perspective, especially given the last 2 weeks kind of being more B-shaped when we look at it, or even the double distribution that we had a few weeks back. But albeit we are still in kind of this, you know, multi-week balance here, albeit at the top of the range. We didn't go. In fact, why am I on a 30-minute? This will make it easier. Let's go to a 1 hour. There we go. So basically, like I said, a P-shaped profile for the previous week. Oh, that's why it was freaking out, because Globex is open. Sunday is open. I was wondering why nothing was loading for a second. It looks like we stalled because all of the tick data started flowing in because we have orders on the books. So naturally, we're gapping up a few points here in the NASDAQ to start the Sunday session. Basically opening above where, I guess, not settlement. Below settlement, previous day close around 450s. We're trading right around 425s at least to start the session, which is basically the point of control of last week. On the NASDAQ, 425s, roughly 423s, we'll call it. So as I was saying, we have a P-shaped profile for last week. We had that passive sell to start it, and then we rebid off, you know, same thing, the value area low of, you know, 19,900. So we didn't quite do what ES did, which was go completely retest the previous week low, but we did go retest the previous week's value area low and rebid almost to the tick off of that. and naturally went completely bullish since then. So as far as a true breakout, if we continue to build volume above 400s on the NASDAQ and ES is still trading above 5,800, there's no reason to be short this market. In fact, you should be zooming out and looking for a trip all the way in the NASDAQ, longs in this general area above 500, maybe for a trip to 20,800s. And God forbid a trip to all-time highs, maybe for the NASDAQ. Maybe Nick's wrong with his July call of saying the highs are in for the NASDAQ for this year, which is something I did say in July. I do still think we may hold that true, but the market loves to prove a liar out of you. So we'll see what happens. It's hard to look at this and not be pretty bullish, especially with us closing near the highs of last week, closing above the point of control. And with all of this thin volume here, between 20,400 and let's call it 20,500 and, the 20,600 even. And if we get above that, why wouldn't we go retest 20,800s where this high volume is from the July all-time highs? Oops, new version. Let's refresh. Let's see what happens here. Hopefully nothing breaks. There we go. So yeah, the plan for NQ, guys, if we were to get some weakness in the early part of this week, I would once again just be looking to fade this potentially back to last week's pivot, which you remember was around 20,100, which did provide a pretty good rebid opportunity, or something that we could have bought in the early parts of this week and felt pretty safe about staying long. And below that, we really need to get, if you wanted to short this, we really need to be below 300 for that trip back down to 20,000 evens, which for the last few weeks has still provided a ton of resistance. If we were to lose this kind of 300s, this 400s area, you're back in this old balance where you'd be looking, for weakness below 300s and potentially traversing all the way back down to kind of the lows of last week or this old point of control. Basically, all of this volume that occurred, it's going to be, that big round psychological number of 20,000. And looking to see if buyers once again passively rebid in the low nines. If they don't, all bets are off, but I would, likely say we would probably find rebids once again in that kind of 600, 700 areas as well. So NQ is in a longer time frame balance, a pretty wide balance, but if we get bullish above 500s, guys, it could be off to the races. So just be careful if you are trying to short the NASDAQ right now. Play the edges. But if we get above 500s, do not step in front of that. It absolutely could go, nuclear to the upside. We'd love to make the joke of the hold my beer type candles, the Leroy Jenkins moves that the NASDAQ can provide. This is one of those weeks where if we get the bullish momentum, I don't want to step in front of it. I have no interest. Let the move happen if I can get it for a few points. In fact, I was, on, Thursday and Friday. In fact, I was long off the 300s twice. The lows, basically the lows of the session, almost back-to-back days. And I captured maybe 40 points total in both of those trades, albeit they were green trades and I'm green to my XFAs and I was green to my live account on Thursday as well, taking that trade, but basically was the low of the session. So you got to learn to let your longs ride in NQ is something I am trying to get better at. But that's kind of the plan for the NASDAQ, guys. Above 400s, look to potentially ride this about 400 points even higher if we can get that bullish momentum out of the start of the week. If ES, like I said, is falling inside the 5,800s and NQ is in the 3 range, be careful for larger sellers being, in this market and potentially looking to take profit. Keep an eye on where NVIDIA is trading as well as the rest of the Mag 7. We do have more of the bank earnings this week too. So there's a lot of, not necessarily catalysts, but there's a lot of things that could shift the market from a, earnings perspective this week, even in the pre-market, the first couple of days with some of the financial institutions, reporting on Tuesday. Tomorrow, the market is open. It's a full trading day, but it is a bank holiday. So they are actually not, a bunch of them are not reporting until Tuesday's pre-market. So it could provide a little bit of volatility in the early parts of the session, the same way we kind of do when we have our usual 7:30 Central news releases. But just be aware, none of those are reporting tomorrow. It's all going to be on Tuesday, given the bank holiday tomorrow. But let's jump over to GC. So if you remember last Sunday, we talked specifically with GC about, not looking to long up here. And I think where we were opening the session was in, like the high 26s. I think we were somewhere like 2670s or so, basically probably where we were even trading at right now, maybe somewhere in that general range. But we had said, I'm probably not the first person to trying to long GC there. I would much rather try to long in the 20s, in the, I think 2650s even. I was talking about kind of the lows of the previous week. And if you were to lose that, I said, look out, because it probably is going to rotate back into the low 20s, which is basically what it did. I think it went a little further than I had expected, but it did provide, kind of where the breakout was from a few weeks ago, going back into kind of mid-September. That 2600 level, the 2620s, basically where we broke out to the upside and actually made the new all-time high, was where you found passive rebidders, this low volume edge right here. So you got to the very bottom of this, low volume node, from all of this breakout volume that we had when we pushed out of 2500s. 2620s was that low volume edge we had talked about last Sunday. And naturally, as we keep talking about volume profile, that is where you found passive buyers stepping in to defend positions or initiate positions. It doesn't really matter. They pushed us back up into an area of higher volume into the mid 2600s. So that's what we're always talking about with volume profile, is if you are trying to find a trade, if you're looking for a good area to potentially, interact, not necessarily long or short, but just see how what price action tells you when volume action, when price goes to that level. It gives you an indication of what you can do, or can you enter a trade, and which side of the trade you should potentially be on. Naturally, we saw buyers step in there, and we are now trading back at an area of higher volume on gold. So the same rules apply here. You've got 3 weeks straight of, lower looking, points of control on a volume profile. You have another balanced, kind of double distribution. I know, kind of similar to what we had 2 weeks ago. Last week was very balanced, but you're basically in the dead center of this large volume shelf here. So the same rules apply. If we kind of get below 2660s, you may see us continue to sell down back towards that, 30s to 20s area again on GC. Or do we kind of come down to, 2660s, 2650s, and do we rebid off of that area? Once again, looking at the previous week's volume profile, the bottom end of those ranges, is going to be around 2650s. So the first place I'd be looking to rebid GC this week is going to be right around there. If you lose that, naturally, we're probably going to go retest those lows, maybe even retest 2600 altogether. We'll see. But yeah, I'd be, once again, looking for lower prices to rebid out of this. Like I said, the 2650s, 2620s, kind of where the breakout was from last week as we kind of returned to an area of value. I'm not looking to long it here, but I'd be looking to potentially take a stab at it a little lower. Just be careful if we do get down here into the 20s, there is that possibility that someone could sell us back down to the 2610s or all the way even to 2600. So just be aware. I don't think that's necessarily going to happen. I'd be looking to, once again, passively rebid in the 20s area, but as something keeps making new all-time highs, the second we start seeing profit taking or anything else, you just need to kind of trade it the way you would any other instrument. Where's the volume? Where would we might find buyers again? But if you guys have been listening to me for the last few weeks or listening to me even on Coach Dakota's show, and I've been talking about, GC going to 3,000 at some point in the early half of next year. So I'm still very bullish gold. I do think we're going to continue this meteoric rise to new all-time highs, but we all know the markets that we trade never trade in straight lines. So you need to find the passive areas that we're going to rebid and where we might find large sellers potentially taking profit or re-offering us a little bit lower. All right. Finally, of the big four, let's talk about the circus that is crude oil. The last few sessions or few weeks, months, whatever you want to call it. I believe it's rollover this week too for crude. Somebody in the chat, please correct me if I'm wrong, but that should add another element of the circus that is crude oil this week and how it's been trading with all the geopolitical news and everything else going on. But there's no There's not a, once again, there's not a great directional trade here outside of just thinking, you know, naturally being bullish, bullish CL, just given everything that's going on in the world and all of the moves that we've had kind of to the upside off this low in the 60s, 65, 64s. And us once again went to go retest it in the low 60s 2 weeks ago, bid out of it, and are now trading much more in, I think, an area or a price that we are familiar with, which is kind of that mid 70s price on crude. So it's definitely a higher volume area than we've had the last few weeks. A ton of volume has been trading around the 75s going back. Now, with it being rollover, I mean, a lot of weird things can happen with the way this is trading as people are moving positions. I mean, if you guys have followed me, I hate trading rollover week on the equities as a whole. So if you're trading crude this week, just be careful. I don't know what the I guess next contract is actually trading at currently as far as price points, but until rollover completes, we'll talk about that next week or next Sunday, I guess, as far as the new contract. But for the time being, looking at, last week's volume profile, you have a pretty wide a pretty wide distribution, point of control in the upper half of it around 75, 50s. And then zooming out, you kind of have to be aware that you've got to, from when you zoom out and look at the volume from the last couple months, you're basically in the center of value. I almost said a high volume node right here. Sorry, dogs are barking. Around 74, what is that? 74.50s. So we're trading right around almost the point of control for the last few months, in fact, on the, X contract in CL. So if you look at even last week's distribution, where we sold off was basically the high volume node from this longer time frame as well. So if I'm trading crude, I'd be looking for us to maybe passively sell down. Could even be all the way to 72, 50s, 70, 73s and change, maybe even all the way back to 70s if you got any sort of weakness to go kind of retest this breakout level from the last couple weeks. But if not, I'd be looking to get long above, 75, 50, 76 even, and then potentially, even ride this all the way back to 78s. If I'm looking at the volume profile here, where's the next logical place I could find buyers? Are going to be at, last week's high again, or excuse me, sellers going to be back at last week's highs. So if we got above 76s, you could potentially ride that all the way back to last week's high. So, but with it being rollover and everything else going on in the world, I have no interest in trading crude. I don't want to be whipsawed. We've been talking about this Sunday after Sunday. It's just a choppy, large swings each week, rangy. I don't know. I would struggle to trade this and have any sort of direction. So the logic is follow volume, follow price action, see where you can find, passive rebids again, and where you might find motivated sellers back towards these highs. Know your levels, know your volume spots. What is this? This is use Hoag's levels even to give yourself a good idea of maybe good entries or good potential spots to interact with. So, because he's got his weekly kickoff high at 77.50s. So, like I said, if we were to get over this high volume edge here, maybe that's where you're riding this to, is the weekly kickoff high in crude. And if you got the weakness, kind of broke below 74s, maybe you ride that down to 72s and change. We'll see. Pretty wide distribution for the last couple of weeks here in crude. So it makes me a little nervous to want to trade, that type of range, almost a 10-point range, $10 range, in crude oil over the last 2 weeks of trading and it being rollover. So just be careful, guys. This has been a wild instrument to trade the last couple months. And as I'm going through this, so we're going to jump into some earnings and what's on the, the economic calendar as well. So if there's other things you guys want to talk about or you have questions for me, throw them into the chat. We will grab them and get to them near the end of tonight's session. So please keep peppering them in as we're going through this. All right. Yes, still trading right around 58.50s. Really haven't moved much to start Globex here. NQ still trading around 425s. Yeah, so not a ton of movement outside of the small gap up from the Globex Open that we already filled on the NASDAQ. So otherwise pretty quiet Sunday session here. Everyone enjoying their football Sunday, it seems. So let's jump over to earnings. We talked about tomorrow being a bank holiday. Markets are still open. Markets are going to be trading. Futures are open. There's no issue for all of us degenerates that love to trade day in and day out. But there are no, major earnings tomorrow. In fact, we started the earnings season kickoff on Friday with JP Morgan and BlackRock, and naturally the banks are continuing that cycle with Goldman. You've got Citi, you've got B of A, PNC, Schwab, and then even more of them with, US Bank and a few others, kind of some of the other smaller regional banks later in the week on Wednesday. There's nothing outside of the big banks that's anything that's really going to be just wildly market moving. Obviously, anything those CEOs say or as they articulate things could absolutely move the market in the pre-market specifically. But the only thing that may provide some volatility in the after hours for the NASDAQ specifically is going to be Netflix on Thursday. Obviously, we have all the big banks and, everything that they can say can move the markets and could provide a little bit of fear or a lot of, I guess, a sigh of relief if they're all, mission accomplished, just like the Fed is, and everything's looking good, no recession, they think everything is fine. Who knows if they would even tell us the truth if it wasn't. We tend to react very after the fact with whatever the banks are telling us, but it is what it is. But the logic is there should be a tradable opportunity in the NASDAQ. If you are an earnings trader, if you do like to trade until the true close at 4 p.m. Central, Netflix usually provides a good amount of volatility for our NQ friends in the after hours portion of, futures trading. So be aware that is Thursday if you are holding positions all the way to the, basically the margin close at 4 p.m. Central that Netflix is reporting, and there most likely will be some wild moves as we usually see in the NASDAQ when any of the larger weighted organizations are reporting at that time. So just be aware. Otherwise, earnings season is back. I'm very much looking forward for Tim Apple and Jensen to eventually have to save the world if we get any sort of weakness in the coming weeks, for them just to push us back up. We always seem to, get a move and then we trade and balance for weeks because, the market's waiting for Apple to report and then it's waiting for Nvidia from J. Powell. So until these things tend to happen, we just do what we always do, which is range and balance and, kind of wait for the next news release or whatever it is. And even though markets are forward looking, we always tend to be waiting and in the wings for something else to happen before we actually make or price in a specific move. But yeah, otherwise earnings season's back. Basically just the banks this week and Netflix, and then it should get, into kind of the larger swing of things as we get into the heat of October as well. On the economic calendar front, it is another lighter week, to be honest. Nothing too crazy outside of, a gaggle of Fed speak. Once again, we've got Mr. Kashkari himself talking not once, but twice tomorrow, as well as a number of others throughout this week. The only major events are going to be, realistically Thursday, you've got retail sales, you've got jobless claims, you've got the Philly Fed. But other than that, it's a pretty light week as far as major news releases. There's not a ton of employment data this week. You've got some bond auctions, jobless claims, like I said, but otherwise a very light week, kind of in the early stages of, like I said, earnings season, and that's the following week, so we won't get there. But you have what we usually have been having since the Fed blackout period ended, which is just a bunch of, mouth breathing that at any point can, stop you out of a position, because you just never know what our favorite talking Feds are going to say and potentially cause, the algos to overreact and stop you out of a position, or maybe get you some points out of it because you were positioned, we weren't moving. And then Kashkari likes to say that, his favorite flavor of inflation is no longer Stouffer's lasagna. It is now Tostino's pizza rolls. We'll see what he says. But when things like that happen, it's just terrible. So I hate that, you know, we don't have bells on some of these guys, and that some of their symposium speeches are non-events and others are, you know, actually about monetary policy, or they're giving statements on CNBC about monetary policy. And other times they're giving, you know, speeches at science centers or economic summits or a bunch of, you know, charity events, whatever it is, but they're not actually talking about anything policy related. So it really is a non-event. But we'll see. I don't know what any of these actually are this week, and who's actually giving a relevant conversation about monetary policy and who's just getting a, you know, a book tour type of check. We'll see. But otherwise, pretty light week on the data front, on the earnings front. So let's look at the gamma data going into this week. As always, I like to show you a good preview of what our options degenerate friends, our market makers, everybody on the kind of longer time frame gamma exposure options chain looks like. And lo and behold, these degenerates are ready to send us all the way to SPX 6000. If you were in love with 5,800, I would be surprised if we moved too far off that level. But please be aware that we have gamma exposure all the way up, not only to a new all-time high, but Tom Lee's new favorite round number at 6,000. So if you're looking for the Santa Claus rally, if you're looking for, you know, no weakness into election season, there's your exposure right there. There's the target. That's where we could be going. Without looking too deep into what the December contract for ES is and, you know, where we may be trading, I have absolutely no idea. So the big number to watch, keep in mind, this is not zero DTEs. These are, you know, endless expiration in theory. This is the entire chain. So this could be 2025, 2026. But I tend to look at them at a little shorter time frame. But when they kind of are so skewed to the upside like this, it's just something to be aware of, guys. Without a catalyst, it's really hard. It's going to be very hard to push this market down. We're that bullish. We're that euphoric at times, it seems. So please be aware. You've got, you know, the usual large strikes here, but I love how we kind of just skipped over like 59.50s even, and we're like, no, 6,000. We're going to say hold my beer to some of these other strikes, because we're going to go to the next big, you know, $1,000 round number and go tag that. Even looking at the gross gamma, I do think 5,800 is going to act as a magnet for the foreseeable future. So us pinging it multiple times, trading above it, trading below it, acting as support, acting as resistance. When we get below it, maybe even go back and retesting 57.50s. It's going to be the largest strike for the, you know, most likely at least the next week or two. I don't put as much as I'm putting weight in 6,000. Just keep that in the back of your head. I would not say we're going to get super bullish and just go blow through all the way to 6,000 here in the next week or so. I find that very hard to believe with, you know, in an election cycle that we just go continue to move like we were in July. Who knows? I've been wrong before. But these degenerates are ready to push us all the way up. It might just be Tom Lee himself calling, you know, all of these highs, or these are the banks making sure that they're, you know, lofty at times price targets for the S&P 500 are finally being met, and they're going to do it in the last quarter of the year. We'll see. Who knows? But it's just something to be aware of. In fact, like I said, make note of that. Know where it's trading. Know the other large strikes here, but keep in mind, it's going to take a lot of effort for us to really push away from 5,800, it seems. So just be aware of that. But these degens are ready to shoot us to the moon. Not only go make air horns, but I think absolutely just continue to just send us higher and higher. We made the joke. I think I was wearing my Just Send It hat on Wednesday during fast markets. That's the mentality in this market right now. So just keep that in mind. If you are actively trying to do if you're trying to do anything more with shorts than I typically do, which is just, you know, scalp intraday, get your points, get out. It is really, 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 really difficult to want to hold a short outside of a few minutes for a few points. Get your points, raccoon, get out, go do something better with your time than trying to short this market to zero, because we ain't going there. Yeah, I'm sorry for calling out anybody with that, but this is the market we live in. All right, so let's get to some questions, guys. This is going to be a lighter prep in itself, just given where we're trading and, you know, the balance that we are barely out of in theory. There's not a ton to do this week. Like I said, I think, you know, it's going to be on the short side, see profit, take profit. And if you catch a good long in the lower end of last week's distribution with passive buyers stepping in, you know, let it ride. Like, not necessarily let it ride like, you know, anything happens, but let your stops play out. If you catch a good long, you know, off the right areas, off this 5,800 and the mid 5,700s, I just have, you know, I've been trying myself to get better about letting my long side trades really play out and then being very scalpy, raccoony with my short side, see profit, take profit type trades, just because there's no reason for this market to go down. And until there is one, it's very hard to hold a short. And I think that's going to continue to hold true until something changes. And I have yet to see what that catalyst may be, but there isn't one right now. So stop trying to short the market to zero. All right. Let's get to some questions here. Nick, why do you prefer 5 accounts instead of sizing up on just one account? So it depends, guys. I have 6 accounts. I have my 5 XFAs and I have my live account on Topstep that has, you know, I still have a $3,000 daily loss limit in all 6 of those accounts. But I like to kind of trade my live account completely different than I trade my XFAs. I tend to be a little more risk averse, a little more kind of just letting the account kind of build itself and, you know, take profit. If you guys haven't known, I've been in my live account since January. So I have well over 30 days of green days. So I can take payouts out of that account whenever I want. So with that in mind, I trade that very much like cash flow, if that makes any sense, where, you know, if I have a couple grand, if I'm up a couple grand for the week, I'll take that money and run. I'll take a payout and move forward and kind of keep my balance at a certain level in my live account. And then anything above that each week is how I like to take payouts. So I really don't size up in it. You know, I'll trade 5 contracts on ES. I'll trade, you know, 3 contracts on NQ and, you know, kind of take my one trade. If I get 20 points on a NASDAQ trade in and out, $1,200, let's call it, I'm done with my live account for the day and I will focus on, you know, working XFAs or working my personal account. I've never been a big, like, you know, I know you guys see a lot of BS on Twitter, you know, a lot of things from other traders where they'll throw 15 lots on, they'll gamble the XFAs. And, you know, every once in a while you get these idiots that'll hit a home run for $50,000 and, you know, will tout it on Twitter, go sell their subs and their discords and all the other BS, but that's not real trading. That's gambling. And, you know, you guys have seen me trade almost every single day and I'm trading XFAs and I don't change my style. I'm still building those accounts slowly. Usually when if I have a good day, a good week, 5 days of, you know, profitable days, I'm taking a payout or, you know, the risk team's going to grab my balance in those XFAs and move it to my live because I'm not a high risk trader. I am a, you know, strategic kind of scalper and I get my points and I get out and I'm not, you know, throwing up, $10,000 individual account trades. I do that every once in a while. I do have those big days, but for me, it's all about kind of trading my plan. My plan is not to size up because I can still catch larger moves with the 2 lot or a 3 lot. I don't need to throw a 15 lot on and, you know, go stop break even immediately and hope and pray that it works out for me. So yeah, I prefer to trade the 5 accounts in a bracket, you know, copy trading them all, managing them that way, and then trading my live account as an individual account. And then my personal accounts too. I have an options account. I have a futures personal account that I really haven't been trading very often. Just given I used to like to swing that with micros a little bit more, and it's just has not been a great swing trading environment right now, to be honest. Unless you caught the longs off the August lows, there really hasn't been a great range for me to, you know, throw on a couple ES micros and, you know, make a few grand out of it. You haven't been able to do that unless you caught the lows. So I have not been trading my personal account mainly because part of it's just busy and, you know, it's hard enough to be right once or twice in a day when you're trading, let's say your XFAs and your live account in 2 separate, you know, cause you can't copy my live account with my XFAs. So for me to be right, let's say on 2-3 trades between those 6 accounts, that's difficult enough. And then me trying to then say, okay, I'm logged out of my Topstep accounts for the day. Let me go trade my personal account and hope that I'm right again. It's hard to do that. It's hard to be that good and, you know, be trading different times of day and still have the same level of success with my strategy. So I try not to overtrade. If I have a good day in Topstep or I have a good day in my personal accounts, I tend to just walk away and not sit here all day. You guys may see me, screwing around in the chat and stuff because I don't have anything, let's say, else to do. I've already worked out, I've already ran errands, but I usually am done trading, I guess is what I would say. It's good to just kind of know your time of day, what works for you, when you're profitable. And for me, if I'm taking a lot of trades after the euro close, it's probably going to end poorly for me. Tends to be when volatility starts to die until power hour. And it's just, with my strategy of kind of scalping and the way I like to trade, if I'm not already in a trade at that time, it's hard to, my profitability, my risk reward, you'll start to see it inverse a little bit more. Nick, can you give me any tips on reading NVIDIA or the other Mag 7 for NQ? Confluence or divergence? Thoughts? So if you were to look at a 5-minute chart of the NASDAQ for the Mag 7, a lot of the time it's going to look very similar to NQ. There's nothing to necessarily you need to look to read outside of understand where, like on something like NVIDIA, Apple a little bit different, but on NVIDIA, on Meta, on maybe even Google, maybe even Tesla, just take a peek at the same logic of the volume profile. If you're not looking at the liquidity, if you're not paying attention to them as much as Rips does or as I do sometimes, you don't necessarily know all these price levels that are going to continue to act as support and resistance. So a good way that you can do that without a ton of thought is going to be to, throw NVIDIA on a 4-hour chart. Look at the volume profile for it. See where there's a ton of even just looking at the wicks, let's say on a 4-hour candle and the bodies of those candles. What are those price areas that we are constantly seeing buyers reoffer as well as rebid? And when you start to do that, you just can psychologically have in the back of your mind, even when NQ versus NVIDIA, there may be a divergence, like NVIDIA is selling off, but the rest of the Mag 7's bid, whatever it is, you can kind of throw the divergence versus, confluence out because you have a rough idea of the levels that NVIDIA may rebid off of. Even though it's down for the morning and NQ is shooting through the roof, if buyers step in NVIDIA, let's say at 125, when it's trading at 127 right now, and the NASDAQ is already bullish, if you find buyers there and NVIDIA bids off that, that's pretty good confluence to kind of think logically that we could be, if we find buyers there, we could be on the verge of a trend day for the NASDAQ. So that's kind of how I use it, is if you start to see, weakness in the NASDAQ and you find passive sellers in NVIDIA or whatever it is, it just can kind of add to the momentum of a certain trade, because if we start selling, if the Mag 7 starts selling or buying or is bullish or bearish in certain spots, it can continue to add to momentum to the NASDAQ. So have an idea of where those support and resistance areas are for some of those single stocks, where the big strikes are if you actually look at options data as well. Just like we talked about with SPX, the same order flow, options flow can be done for the Mag 7 and give you indications of where we may magnet towards as well. Does gold move inverse of the NASDAQ? Not really. I mean, everything is kind of bullish right now. If you look at the chart, I would say sometimes the dollar is more inverse or correlated to the way the indices trade at times. But gold, for the time being, it's in its own world in a breakout to the upside. Doesn't really inverse. I would not be using it as any sort of confluence or divergence trade with the indices right now. That is not the way I'd be looking at gold. Nick, can you share your volume profile settings? Yeah, I think I do this every week, but guys, I keep everything very simple. I use ticks. I technically do it on ES, where each one of my rows is going to be a point, but the logic is I'm just looking for high volume areas and low volume nodes and trying to find the individual points of what those low volume edges would be, those high volume edges. And then you can change your colors to whatever you want. The big red line is going to be the point of control, obviously, where the most volume took place. But you can tweak this however you want. I like to just look at this visually as a histogram. I don't use it for delta because I look at delta a little differently. But that's my settings. I keep my value area at the 30% rule, or excuse me, the value area at 70% rule, my low volume nodes at 30%. Nick, are you a trend trader or counter trend trader? I'm not really a breakout trader. I guess I'm trying to get better at it. I would say I am more momentum, exhaustion. I don't know how to describe it, guys. I tend to use, I guess it's like this. I tend to find low volume areas and trade and enter trades in low volume areas looking for returns to value, if that makes any sense. And I do this on a shorter time frame using exhaustions. For example, if you were to look at, something like last week's profile where we, we were chopping, balancing here, we made an excess low and, we returned to this kind of, low volume edge here, which even the longer time frame, this low volume node down here, that's an area I would probably look to enter long. And I'd be looking to enter down here for a trip back towards 5770s. So I am more so looking for entries in low volume areas in the auction for trips back to higher areas of volume. That's how I can describe my trading in just an overall perspective. Obviously, the way I scalp on NQ is a little different. It's got more to do with order flow, momentum, exhaustion prints, delta, and a few other things that I use. But overall, on a longer time frame, me establishing areas that I'm interested in potentially taking trades at has everything to do with volume on the longer time frame and looking to enter in low volume areas for trips to high volume areas. Nick, do you scale out? I do sometimes, but I'm pretty bad at it. I tend to be the type of trader that doesn't want to, hold hands with my trade for hours and hours, even holding runners. I'm sometimes good about holding runners, but a lot of the time, guys, I'll get my points. I will, enter in one clip and I will exit in one clip. It's kind of my style. I will get my points, call it a day, and be done from there. So I don't usually like to, or not necessarily that I don't like to hold runners. I'm trying to get better at it, but I'm also very strategic with getting into like a 3-lot NQ trade in one clip with a 10-point stop, not getting stopped out and taking it off for 30 points in total for all three, contracts, and then just being done for the day. So that's typically how I do it. I'm trying to get better to the long side specifically about holding those trades, holding runners in those trades. Hang on for a second. I got dogs fighting right next to my desk. All right. Can volume price be used in trading alone without indicators or ticks? You mean volume by price, or do you just mean like volume by price would be like this, volume profile that we're talking about this? If that's what you're referring to, yes, this can be used as a standalone, no indicators. You can just look at this because all it is volume, guys. Volume is all that matters in trading in theory, or one of the many things that is what matters. And you can use this with no other indicators, no lines, just having a time frame, in front of you for what this volume is, and knowing, okay, a ton of interest in trading, down here at 5830s, and not a lot of interest so far at trading 5860s. I wouldn't say you want to short the all-time high up here, but the logic would be if you started getting weakness at 5860s, where are we going to go? We're going to go 30 points lower to an area of high volume. So all the other indicators aside, not looking at delta, not looking at price action, not looking at time and sales, just the basic principle of price action does not spend a ton of time in low volume areas. Excuse me, where there's not a lot of volume, we don't spend a ton of time trading there. We naturally will gravitate towards areas where there is a lot of volume in the auction. So that's the basic theory, that you could use that without anything else in theory. Hey, Nick. So how did you learn? Who trained you? A few people. Part of it just was me. I've traded for a long time, guys. Most of it was just single stocks, my own portfolio, managing, my own stocks. I wasn't actively day trading is the first piece. I was just managing long only type stuff, which for most people is what you should be doing, or your time frame should be a lot longer than, sometimes like my 30-second NQ scalps. But as far as how I learned this, it started with me just getting, exposure to specific concepts, and just there's so much free content on YouTube, guys, whether it's volume-based concepts, whether it's, you know, time and sales. I mean, there's so many different things that you can use, and there's a ton of good traders that have put content out there for free. You don't need to pay for this stuff. I started, you know, learning for free, just following on YouTube and trying different strats, and, you know, kind of eventually got exposure to random mentors throughout the space, whether it was through Discords, through, you know, services and other, you know, indicators and other people that I respected that built chart books on things like Motivwave and Sierra Chart. And I started just asking them questions, getting exposure to the way they traded. And some concepts and some of their teachings resonated, others didn't. So I had always kind of taken the best of, or what worked for me, what resonated for me from a few different people that I had learned and had to have been in this space for a long time, have had success, and understood some of their concepts. And for me, volume structure in the auction made a lot of sense to me. And the way it was taught by a few people made a lot of sense to me. And I try not to overcomplicate a lot of it. So I wouldn't say I was specifically trained by anyone, but I surrounded myself with good traders, and they had opened, you know, the kimono, if you will, with their time, and, you know, kind of not necessarily taught me things, but allowed me to just get exposure to the way they traded and the way that they understood and talked about it. That's why one of the good things is, if you find somebody that kind of resonates with you, listen to how they're talking about the auction theory, or how they're talking about, you know, price action, or, you know, breakout trades. Like, you can listen to the way Dakota describes and teaches how he trades breakouts. There's a lot of good insight into there and what he's talking about if you just pay attention, and there's no cost associated with it. But if that doesn't resonate with you, you could listen to someone like me and the way I describe how I trade with volume. Maybe that works for you. But the logic is, there's a lot of good there's a lot of good mentors out there. There's a million bad ones, but there's some good ones that you can, you know, just get exposure to for free, and then continue to research these concepts. You don't need to pay somebody for some of these things. That's the first thing I will say. Nick, how do you trail your stop loss, or do you trail at all? I do when I am scalping NQ. Usually after about 20 points, that stops either at break even or maybe +5 for a 3 lot, so that I'm not getting out for, you know, a loss in theory. I would happily re-enter, but I am, you know, usually with the way I scalp the NASDAQ sometimes, especially if I'm counter trend trading, I will trail that to, you know, 15, 20 points pretty quick if we start getting, you know, the way NQ can kind of move, especially when it gets some legs, let's say on a short. If we get that, and just knowing that you're an idiot if you're holding shorts these days. So if I'm see profit, take profit, I will gladly, you know, if we got a quick 30-point dump and I, you know, can capture 20 of it guaranteed, I'll throw my stop at 20 points and be ready to call it a day at that point. So yes, I do trail it. I do it manually most of the time. I'm actually trying to do my hotkeys so that I can push a button in it. You know, we'll, let's say, move it to 10 points, move it to 15 points, whatever I'm feeling, or however I'm adjusting it, so I don't have to drag the mouse. But I would recommend you doing it if you do scalp NQ, especially if you are trading a counter trend, or in this current market regime, if you are trying to capture points to the short side. I think you should be trailing your stop right now. Get out for the paper cut, or get out for a couple points if you are counter trend trading to the short side, because you might be about to be, you know, just ran over by any of these candles at any time. I'm trying to come up with a 1 contract loss limit stop for NQ. What do you use? Depends on your time frame. Depends on, you know, what is your take profit in theory. You could use a 1-to-1 risk reward, but it really depends on your entries. For example, like I said, with me trading a 3 lot in 1 clip, I'm pretty comfortable with a 10 to 15 point stop on a lot of my entries, mainly because I tend to feel if it gets above that level, or that 10 to 12 points, whatever it may be, I am wrong. So I should get out. With 1 contract, I feel like it really depends on, you know, the size of your account. Are you trading a combine? Is it an XFA? What's the balance? You know, what are you trying to capture? Is it a long? Is it a short? There's a lot of variables there when you're kind of looking at it, but you need to understand why you're entering a trade, and, you know, understand, even just using candle structure or volume or something, where is the best place to place this stop? Because if it's 20 to 30 points, your entry is probably garbage, would be my first thing if you're trading NQ. On ES, a little different, because that 20 to 30 point range on the NASDAQ, where you could say, well, I'm not technically wrong if it trades there. that may be true, but in ES, that could be 2 points. It could be 5 points. It depends on where that resistance is that you're looking to take that long or take the short. If you really need to know when you're setting a stop, regardless of contract size, where am I wrong? And why would I be wrong if price trades there? Because there's two sides to that. Either means your entry is, if you feel like you're still potentially not wrong on this trade and you get stopped out, well, your entry was probably garbage, or your stop potentially should have been your entry. So it really just depends. Like I said, on NQ, I'm using anywhere from a 10 point to a 15 point stop, depending on size, depending on location. On ES, you guys have seen me trade on fast markets with ES, and sometimes it's a 2 point stop. I'm not confident in some of my, ES resistance levels or, option walls and things like that, where if it blows above it, I could be wrong, very wrong, like I was on Friday. And I didn't necessarily stick to a 2 point stop. I got ran over and then got stop runned and had a bad day. But there's other times when if I'm leaning into, let's say, a call wall of gamma strikes at, let's call it 57.50s, and, I'm pretty confident in that, I probably can use a 2 to 3 point stop on ES. And if we're above it, I'm wrong, but I could definitely hold firm in that my entry is good, and that if we do find passive sellers there, or if I see them already coming in, that this is absolutely potentially like the high of the day or the high of this portion of the session. It's a little easier to do in ES. NQ just will wick you out. All right, friends, that's all the questions that are in the chat. So I'll pause for another second or two if there are any more. If not, I do thank everybody for tuning in. Hopefully this has been a helpful hour-long session. As always, this is not designed to give you levels or spots to enter long or short. This is designed to give you a peek into the way that I typically look at attacking a week, as far as having areas in the auction, looking at the last week's volume profile, understanding what the options flow is kind of telling us, understanding what's on the news docket this week. It's going to be a lighter week. We've got a bunch of Fed speak. There's not a lot of data. We got the bank earnings, but should be a fun week to trade. We're trading at all-time highs, so there's really only two directions we can go. We can go make a new all-time high, or we can piss off Nick and just chop around a little bit lower before we break out for a new all-time high and an air horn anyway. But that's the gist. To recap, without getting below 5,800 on ES, it's very hard for me to really want to hold a short outside of scalps for a few points here and there. It's just a tough regime that we're in. But do know, if we do fall back below 58.30s, we're back into this multi-week balance. And so at that point, you got about 100-point range on ES that we could continue to kind of ping pong around like we've been doing. But if we hold, 58.30s or come down and passively rebid 58.10s, it's off to the races potentially for a new all-time high once again. So just be aware. On the NASDAQ, like we said, above 20,500s, be on the lookout for a trip to 5,800s. Be on the lookout for a trip to 20,800s, maybe even 21,000. Maybe we blow Nick's, Heiser in for 2024 prediction out of the water, and I get egg on my face. That's fine. But just be aware, NQ's in a much wider balance range, even where we're trading at right now in 420s. If we were to kind of fall back into the high threes, you're at the kind of top to midpoint of that balance range, and us going back to 20,100 should not be overlooked. There's a lot that can happen, but we'll see. Head on the swivel this week. Thank you all for tuning in. I hope everyone enjoys the rest of their Sunday evening. This is here in DFW, this is the last warm day of the year. I hope it's like 97 degrees, but then it's going to be the low of going into this week is going to be like 49. So we are finally hitting fall. We had false fall last week, but it looks like we are finally turning the corner and having some colder weather, which will make me very, very happy. But hopefully everyone has a great rest of your Sunday. Tune in for Coach Dakota here in about 90 minutes for slow markets, as well as D around 3 a.m. Central Time for the London Open. Please give them the support, just like you guys show me here every week. But if not, I will see you guys tomorrow morning, bright and early, with Coach Dakota himself on Fast Markets. Hopefully we can find some trades. The last few Mondays have been pretty terrible trades, if I do say so. We've just kind of been doing whatever, but hopefully we get some trading opportunities. Hopefully we can find some nice trades. But if not, guys, thank you for tuning in. Thank you for, hanging out. Have a good evening. Trade safe if you're trading the Globex Open here. But if not, I will see you guys bright and early tomorrow on Fast Markets. Have a good night. Thank you for tuning in, and we will see you all tomorrow.